Hi, I'm Phil Grove. Welcome to Get Rich Slow. Over the next 90 minutes, I am going to be presenting a training presentation on how diversifying into real estate can generate wealth and passive income over a 5, 10, 15-year time horizon. I have been investing in real estate for a number of years now, and my partner has as well. We've learned a few things along the way, and we've certainly studied this with many others. And we've tried to consolidate this wealth of knowledge into a video presentation that kind of talks about, the pitfalls, adventures, and opportunities that exist in building your wealth through real estate. Hope you enjoy this presentation. If you are interested in learning more about real estate in general, or taking other training presentations from us, we have a number of different training, mentoring, and other programs available. You can find out about these on our website, www.loveamericanhomes.com, and I'll also talk about some of those opportunities at the end of the presentation. Thanks. Okay, my little non-disclaimer. This subject matter is for educational purposes only. We are not lawyers, CPAs, financial planners, etc. You should always have your contracts, taxes, business plans, etc. reviewed by an attorney and/or financial advisor before completing any real estate transactions. As you can see, I've done this before. Anyway, other housekeeping. This whole presentation will be presented by me live, or at least with video. And you may see me change my shirt from time to time, and that's because sometimes these presentations are recorded at different times, and even sometimes we update different material in the presentations and edit out the old slides with new slides, and of course that means we may not look exactly the same, but it is the same presentation. We hope you enjoy it. So why are we here? Well, we're going to learn today the risks and rewards of investing in real estate as a long-term investment vehicle. Now, real estate is a terrific short-term investment vehicle, and we teach all kinds of classes on how to buy and sell real estate to generate income. But today we're really going to be talking about how to buy and hold real estate to build wealth. And we're also going to learn about how investing in real estate compares to other investment options, like investing in the stock market, for example. So, who is Love American Homes, and what am I doing here telling you about real estate? Well, a little bit about myself. Western Kansas roots, mostly wheat farmers, kind of a product of my genes. My maternal grandfather was a farmer and an inventor, probably the genetic inspiration for my love of technology and engineering. And my paternal grandfather was actually a conservative small-town banker, literally worked in a bank in western Kansas and invested 50 cents of every dollar he ever made in the stock market for 50 years. And by the way, that strategy works pretty well. My dad became a corporate lawyer and moved the family to New York in the late 60s, where I grew up in a small family. I went on to get a degree in electrical engineering and computer science from George Washington University. And I had a 16-year high-tech career, starting as an electrical engineer. Went on to become a field applications engineer, salesperson, marketing manager, marketing executive, and ultimately the director or vice president of marketing at several different semiconductor companies. In the mid-90s, I settled in Austin, Texas. This is where I wanted to live. And I started investing in real estate kind of as a hobby originally. Over the time, I became active in the real estate community, became a member of the board of directors on the Texas Real Estate Investors Association, kind of a statewide association promoting ethical investing standards amongst real estate investors. Board of directors for the Real Estate Investment Club of Austin, the president of the Real Estate Networking Club of Austin, and that's the largest investor club in Central Texas. Founded Love American Homes, also known as Love Austin Homes, in 2003. This company provides real estate services, short sale transaction processing, mortgage assistance and assignment programs, partnering, and real estate training and mentoring. Basically, we're all about working with investors and realtors and helping them become more effective at what they do and make more money at what they do. Also founded Hippie Hollow Homes in 2004, and that's our flipper that buys and builds and renovates homes. And that property is actually, or that company has actually helped over 1,000 homeowners avoid foreclosure, primarily through short sale programs. Of course, the rest of the company is run by my better half, Shanoa Peck. Shanoa is a native Texan. She grew up in Austin High School, went to the University of Texas, went off to Rice to get her MBA. And she's a fourth-generation rental property owner. Literally, her family has been investing in real estate for over 50 years. And she and they are experts at identifying emerging neighborhoods. In other words, if you watch a city develop over decades, you get to see kind of how little neighborhoods you wouldn't think much about evolve into very valuable neighborhoods, and understanding those telltale signs of what neighborhoods to look for long-term potential is a key skill that you really want to understand better. Real estate investor savvy and friendly realtor broker, understands what investors are looking for and what their needs are, very capable of managing and negotiating and mentoring any kind of real estate transaction. Also past president of the Real Estate Networking Club of Austin, Austin's largest real estate club. And unlike myself, Shanoa is a licensed real estate agent. She was actually the highest producing agent at a 100 agent firm in her very first year, and has had record-breaking sales every year since joining the firm. She's a member of the Austin Board of Realtors, Texas Association for Realtors, National Association of Realtors. She's also a licensed real estate broker. Her brokerage company is Hippie Hollow Realty, and she is my partner and vice president of Love American Homes. And I guess her real claim to fame from an investing perspective is also that she's developed this proprietary investment grading system. We call it kind of the morning star of the real estate world, and we're going to be explaining exactly some of that grading in some of the presentations we give today. So let's start the Get Rich Slow presentation by answering the question, why real estate in the first place? Well, fundamentally, real estate is a great investment because it's leveraged appreciation. In other words, it provides a high return on your money because you're getting a return not just on how much money you spend or invest, but on the entire value of the investment. So in other words, if you put $10,000 down to buy a $100,000 property, and that property goes up 10% in value, you don't make 10% on your money, you make 100% on your money, because that $10,000 earned you $10,000 of appreciation because you get the 10% appreciation on the $100,000 asset. So it's a tremendous way to get leveraged appreciation on your investment. It's also a conservative investment with high long-term returns. Investing in real estate assets, these are assets that can't go to zero. You own brick and mortar, it never becomes valueless. It is the most proven investment strategy, compounding appreciation. Most of the most wealthy people in the world have gained their wealth through real estate. It also generates tax deductions. You can depreciate the assets and deduct all your expenses, so it's great from a tax perspective. It's a great way to diversify from just stocks and bonds. It's a tremendous hedge over inflation. We'll talk about that a little bit more. And it generates passive income that grows over time, so you can retire on it, and the income even adjusts for inflation. Now let's talk about inflation for a minute. We call real estate the ultimate inflation hedge. If you ever hear about somebody who's worried about inflation, they'll always say, well, you really want to be in hard assets. You really want to be in hard assets. Hard assets are things like gold or real estate. The problem with inflation is that it kills most investments. Cash becomes worth less, savings becomes worth less, bonds, pensions all become worth less and less. Stocks become worth less, although they do adjust over time. But the exceptions are gold and metal and hard assets. They go up with inflation, and real estate goes up with inflation. But what's really great is leveraged real estate. In other words, leveraged real estate with fixed hard interest loans. Those properties go up in value, and it's, again, the asset value that appreciates, not just the amount that you owe. Now, with trillions of dollars being printed for all the stimulus plans, a lot of people are worried that we're devaluing the currency, which means basically we've got inflation on the way. And if this is something you're concerned with, then real estate is obviously a tremendous inflation hedge. Now, how likely is inflation? Well, your guess is as good as anybody's, but there's certainly a lot of evidence that says that this may become a pretty significant problem. The Federal Reserve has more than doubled the money supply since 2007 alone. This is the money supply basically for the last almost 100 years, and you can see that just in the last year and a half, we've doubled it. It has a tremendous potential to become a major problem, worse than it did in the 70s, according to Warren Buffett. There's only one direction interest rates can go in the future. Right now they're at zero. There's only one way to go from there, right? Up. And if you ask me, our biggest concern right now, if you're over at the Fed, is that they're going to run out of ink with the way they're printing money. Then, of course, even worse than inflation is hyperinflation. Hyperinflation is a high rate of inflation because of rapid currency devaluation. Actually, security analysts in the Federal Reserve did a study a couple of years ago where he asked the question, is the USA already technically bankrupt? In other words, if you take a look at our balance sheet, we face $66 trillion of projected fiscal gap. We owe 5 times the gross domestic product if you add up the value of all the future government expenditures, including servicing the debt and all the IOUs we've written to pay for all of the entitlement programs. This is 2 times the combined net worth of all Americans combined. And everybody knows we have this problem, and everybody knows it's political suicide to address it, so they just keep ignoring it and pushing it off into the future. It's also no secret that 77 million baby boomers are starting to retire. They're becoming eligible for Social Security and Medicare. The average net worth was about $100,000, and that's 30 trillion, by the way, for the 300 million Americans. But the problem is that people are living on credit. They have been using their home as an ATM card to take the equity out of their home every time they want to finance their lifestyles, and now the ATM machine's been shut down. You can no longer do that. So how do you fix all this? Well, the government can double our tax rates. Well, we all know for a variety of reasons that's not going to happen. We could cut Social Security entitlements and all entitlements by 66%. Well, we all know that that's not going to happen. We can cut discretionary spending. In other words, we can cut all spending on everything that we haven't already committed to, and we'd have to cut it by 143%. Well, technically, you can't cut anything more than 100%, so that wouldn't solve the problem. So the only other thing you can really do is print more money, i.e. devalue the currency, which leads to hyperinflation. This is what all countries with massive debt have done before us. This may be what we have coming down the pike. So we've already put about $8.5 trillion worth of stimulus into our balance sheet. We'll be dealing with that in the years to come. And what that means for real estate, well, nobody quite knows, but it would seem that real estate is a pretty good place to be. Again, as a leveraged hard asset, these are the things you're worried about. So just to make one last point about inflation and appreciation, here's why real estate is such a good idea, especially as things become more inflated. If you buy a property for $150,000, you put $30,000 down, now you have 80% loan to value. In other words, you have a mortgage of $120,000, maybe with a 7% fixed interest loan, which means you owe $700 a month in interest. And you rent this thing out for $1,100 a month, and after you deduct taxes and all your different expenses, you'd be about break even. Now, if you hold this property for 8 years and just get average, just 30-year average appreciation of maybe 5.5%, after 8 years, the property is going to be worth $230,000, and your loan to value will be down to 47%. So you basically earned $123,000 of equity on your $30,000 investment. So that's pretty good, meaning you've gotten a 300% return on your investment. So in this scenario, with just 30-year historical data, very, very mediocre appreciation, you're going to triple your money in 8 years. Pretty slick. But what if we have inflation? Well, if you get 10% appreciation, which might mean that you bought in a little better area, that it's appreciating a little faster, and or you're helped out with some inflation, now after 8 years your property is worth $322,000, your loan to value is down to 37%, and you've got $214,000 of equity in that property. Now, if we get high inflation, like 20% appreciation, that's a combination of inflation and picking the right house in the right location. After just 8 years, your property is worth $645,000. Your loan to value is down to 18%. In fact, in other words, you owe almost nothing compared to what it's worth, and you've made over 1,600% return on investment. So in any of these cases, the thing to remember is this. Some people argue, well, if there's inflation, yeah, you know, your $100,000 house is now worth $200,000, but, you know, $200,000 isn't what it used to be. Well, that's true, but you still only owe $100,000 after 8 years. In this example, you owe $106,000. And by the way, $106,000 isn't going to be as hard to pay back as it used to. So it's a great way to lock yourself in. And your payments and interest rate is locked at 7%. So even though inflation causes rents and everything else to go up, you don't have to pay more on your payment. So you get higher rents with fixed expense. You still own the asset, and you'll still get to appreciate the asset and take all the deductions for depreciation in the asset. So your total appreciation is adjusted upwards due to inflation. That's the bottom line. Real estate is the best place in the world to put your money long-term, and especially long-term in the event of inflation.